A quick move on, then let's focus in on healthcare major Apollo Hospitals. Remember, they announced a fundraise of 1,170 crores, through the allotment shares via the QIP route. My colleague Ajay Sharma caught up with the managing director Suneeta Reddy to discuss that fundraise as well as the outlook on the company and their debt reduction plans. Let's listen in.
So we were oversubscribed by 15 times with an order book of $2 billion. I believe that our bankers worked hard and they worked well with us. But more importantly, I think it bodes well for healthcare in India, which really is at a turning point, an inflection point, where in a way we have to shift the business model. While we focus on core healthcare services, we do have to look into creating an integrated healthcare system, and I think this is what we projected, that Apollo has created an integrated healthcare system, of which 53% of our revenues come from pure healthcare play, where 41% comes from pharmacies, and where AHLL, which is our retail arm, contributes 6%. So we see potential in each of the verticals, and we also see the potential of Apollo 24/7, which is our digital interface, tying it all in together, creating value closer to the consumer.
Right. Suneeta, I would break it down, those segments and the factors over there in a moment from now. If you could first, for the sake of our viewers and shareholders who are watching this interaction of ours, you raised about 1,000 crore via this QIP. If you could tell us how this breakup would be in terms of utilizations, how much money would be utilized for what kind of purpose?
So 410 crores of the 1,160 crores will be used to complete our acquisition of Apollo Gleneagles in Calcutta. With that, we'll have a significant presence in the eastern market. 150 crores will be used for our digital app 24/7, which we launched during COVID and which we have 5.5 million users. 100 crores will be used by will be infused into AHLL to grow the diagnostic business. The balance would be used to reduce debt for a short time till we look at maybe some bolt-on acquisitions coming in the future.
Right. Let's talk about the debt reduction for a moment. With this particular reduction round, how much will the debt overall go down by, and what's the roadmap? What kind of debt would you like to have or take it down further going forward?
So it's currently at 0.8 and it will become 0.5 to 1. So we're in a very comfortable debt to equity level with 0.5 to 1. We believe that we will still be comfortable at 0.8 because we would have had we'll still have an EBITDA to debt of interest coverage of 2.5 times, and that's a very good place to be in. But having said that, I think having a healthy balance sheet, especially when we've been through a pandemic of this nature, which impacts both the health and the economy of the country, is very important.
Also want to understand, see, in the last 24 months, not only 1 year of pandemic, but in the last 24 months, the way the market ecosystem, not only the stock market, but the entire market ecosystem has started to look at healthcare and hospital business in a very different and much more improved light. Earlier, it was just seen as a big asset-heavy business, but things are changing quite a lot. Talk to us how your own facilities, hospitals across the country are doing, how the utilizations have improved. I understand the Navi Mumbai facility also has really, seen a lot of traction now, which the street also appreciates. If you could talk to us a little bit about purely a hospital business.
Yes, so hospital business, I think all of us had a difficult time, especially during these 9 months. But going forward, I think the pandemic has showed that there will be a continued demand for healthcare services, and that infrastructure in healthcare services is sadly lacking, and that we need to continue to make these investments. So going forward, there is a strong demand, and this is because of the demand-supply gap. And I think it's really proved out by the fact that occupancies in Navi Mumbai have improved significantly. We are looking at healthy margins coming from Navi Mumbai facilities. I could say much more in February, but till then, just to say that yes, we're seeing growth and we're seeing margin improvement. Margin improvement is coming from better case mix and reduction in structural cost, which I think will give us an additional 150 basis points of margin.
Ma'am, there's a perception in the market that, or I would say the analyst community or the funds which are holding your stock, that there is a lot of scope for improvement as far as your overall blended margins are concerned by the steps which the management is taking across its businesses. Would you like to share what kind of improvement of efficiencies or processes which the company is taking in different businesses, and how much scope do you have to improve your margins, say, over the next 12 to 15 or 18-month period?
So currently our mature hospitals are at margins of 22%. Our new hospitals were at margins of 8% in the second quarter. What we see going forward is that 150 basis points improvement will impact, and mature will move to 24%. And the new hospitals have the ability, and some of them have already shown an improvement to 17%. So I do believe that we can achieve blended margins of 20% in the next 3 years.
Wow, that's very heartening to know. Let's shift focus and talk about the much more exciting space of healthcare. We've seen a lot of private equity deals happen, scaling up of operations. I'm talking about the pharmacy and diagnostic end of your business. Talk to us for your own business. What are your plans to scale up? We understand there is some amount of thinking to get in a strategic partner there as well. How would you like to grow this end of your business?
So pharmacy currently at 41% of our revenue. We do plan to scale both the infrastructure, which is the stores, as well as the online pharmacy, which we will do through 24/7. So we do have a plan to grow it to 5,000 stores from the current 3,750 stores. And the potential for revenue, of course, is double that. But clearly, we do have plans to do that. More importantly, the EBITDA margins are also improving. In the second quarter, we registered EBITDA margins of 7% on a holistic basis, and the back end at 6.3%. So clearly, margins also improving because of our focus on private label, where the margins are much higher. So 8% of our current revenues come from private label, which we have 50% margins. So we are growing this. We believe that the online pharmacy will definitely grow the top line, and I think we can engage with more consumers. We also have to remember that Apollo pharmacies, if you look at it today, 40% of India is about 50 minutes away from an Apollo pharmacy. So the growth in physical infrastructure is also as important as online. The diagnostic business, which is in Apollo Health and Lifestyle, currently we have 624 diagnostic centers. We believe that we can ramp this up very quickly and become the leader in South India as well as East India, where we have a strong presence, and then move to the north. But we do have plans in place to really grow the diagnostic business. As you know, the margins are higher, and something that will really support the growth of Apollo Health and Lifestyle.
Ma'am, I understand that you're being approached by private equity investors in these two end of the businesses. If you could share, at what stage would you like to get in a partner, even if it is to establish, say, a valuation benchmark or some kind of a strategic partner? Have you been approached? What kind of conversations have you engaged in recently?
So of course we've been approached by strategic and PE investors. This is due to the credibility of the model and the fact that Apollo has a very large consumer patient base of 32.7 million people. So the potential to grow this is huge, especially because 24/7.
Well, more on that later. That's all from us on the show for now. Thanks so much for watching.